Good evening everybody. Today we are going to discuss about the different kind of ratios of activity ratio or efficiency ratio. Okay. Before going to discuss about the activity ratio, efficiency ratio, I would like to cite what is the purpose of this particular ratios. Look at everybody. Analysis of short-term financial position. To analyze the short-term financial position of the organization, there are various liquidity ratios has to be calculated, and there are various activity ratios or efficiency ratio has to be calculated. And last class or previous classes we have for analyzing the short-term liquidity position or the short-term financial position of the organization, we have already calculated different kind of ratios such as current ratio, then liquid ratio and absolute liquid ratio. So how to calculate current ratio? Current asset by current liability, and the rule of thumb says that current asset should be 2 times to the current liability. So the rule of thumb says the acceptable rule is all about the current ratio should be 2:1. Thereafter what? Liquid ratio. Liquid ratio shows the relationship between liquid asset divided by current liability. So liquid assets are those assets which can be converted into cash within a period of 1 year, where inventory and prepaid expenses should not be included under the liquid assets. Thereafter absolute liquid ratio. Under absolute liquid ratio we have to calculate the particular absolute liquid ratio with the formula absolute liquid asset by current liability. Absolute liquid asset means what? It is cash and bank balance, cash in hand and cash at bank, and the short term investment which is coming under the absolute liquid asset. Apart from these two items, cash and in hand and cash at bank, as well as this short term investment, no other items should be taken into account while considering about the absolute liquid asset. Thereafter today we will discuss the activity ratio or efficiency ratio. Okay. So activity ratio or efficiency ratio, why it is known as efficiency ratio? To check whether the short term financial position of the organization is there or not, whether good or not, whether efficient or not. To test the efficiency, this ratio has to be calculated. So what are those efficiency ratios? That is inventory turnover ratio, debtors turnover ratio, creditors or payable turnover ratio, and working capital turnover ratio. These 4 ratios has to be calculated to check the organization's efficiency. How much in terms of inventory point of view the organization is efficient, how much from debtors point of view it is efficient, how much from creditors point of view it is efficient, how much from working capital point of view it is efficient. So today we will discuss about the inventory turnover ratio or the inventory or the stock velocity, okay, ratio. The first efficiency ratio that we are going to talk about, what? Inventory turnover ratio. What is that? Inventory turnover ratio. So what is the inventory? First of all, inventory means inventory comprising of 3 things. One is raw material, the next one is work in progress, and the last one is finished goods. So inventory मतलब ये तीनों चीज़ों को हम बोलते हैं, जो कि रॉ मटेरियल हो सकता है, वर्क इन प्रोग्रेस हो सकता है, एंड फिनिश गुड्स हो सकता है. ये 3 चीज़ों को क्या है, हम क्या बोलते हैं? इन्वेंट्री. एंड इन्वेंट्री शुड बी ऑप्टिमम, neither excess nor in excess. The inventory should not be high or should not be low. It should be optimum level of investment in the inventory should be keep. Okay, we should keep in mind the inventory should be maintained in optimum level, that is adequate level, neither too much high, neither not too much low, neither too much high, not too much of low. If there is a over investment of inventory, that means your entire money is blocked. अगर आप ज़्यादा से ज़्यादा मनी इन्वेस्टमेंट कर लिए इन्वेंट्री के लिए, जो आपका ज़्यादा से ज़्यादा रकम ब्लॉक हो गया, कहाँ पे? इन्वेंट्री. अगर इन्वेंट्री सेल्स में कन्वर्ट नहीं हो पा रहे तो वो दिक्कत है एक ऑर्गेनाइजेशन के लिए. इसलिए हमेशा क्या है, एक राइट अमाउंट और द मिनिमम अमाउंट ऑफ फंड्स शुड बी इन्वेस्टेड इन इन्वेंट्री, and you should see that how fast the inventory being turned, how fast the inventory being cleared into stock. You have to see one by one. Okay, so inventory turnover ratio we have to calculate for that purpose. But what is inventory? Raw material, work in progress, and finished goods. If there is inventory, if an organization is keeping more inventory, if an organization is keeping more inventory, that means what? There is a unnecessary block of investment, unnecessary block of money. It is unnecessary block of money if you are investing too much of amount of money in inventory. This is an unnecessary block of money. Similarly, it leads to what? Obsolescence. Obsolescence means it might happen that it can lose its quality, it may be deteriorate, okay, it may be lose its quality based upon the time. So it become obsolete when the time progresses. So that's why you should not have the more and more inventory you should not keep. Similarly, also for keeping that inventory you should have incur different kind of cost. It may be storage cost, it may be rent of warehouse. These are the cost you might incur while keeping the more amount of inventory. Okay, there will be storage cost will be there, there will be rent of a warehouse will be there, and there is a different kind of cost like store room, staff salary, like that. Different kind of cost will arise when you are having more amount of fund which is invested in the term of what, everybody? Inventory. So there might happen that it will have deterioration also. Okay, if you are investing too much of amount of money in inventory, unnecessary there is a blockage of fund, unnecessary when the time progresses you lose the particular value of that particular raw material or finished goods because of the change in the technology, that is obsolescence. Similarly, there are different kind of costs will arise, storage costs and the rent of warehouse, storeroom, staff salary. Okay, then deterioration. Deterioration means the quality you can lose, because if some stock will be there for long years or long days, it will lose its quality. So that's why that leads to deterioration. So that's why you should not have too much of inventory. Okay, because too much having the inventory or more of inventory, it is harmful for any kind of organization. Okay, so that is inventory. And why we should not keep more amount of money invest in inventory, why there should not be any kind of more and more quantity of inventory. These are the reasons. Okay, so inventory मतलब raw material, work in progress और finished goods को हम बोलते हैं. Okay, thereafter today the first activity ratio, that is known as inventory turnover ratio. Okay, inventory turnover ratio. Turnover ratio. What is inventory turnover ratio? It is nothing but, okay, cost of, okay, that is cost of goods sold, cost of goods sold by average inventory. This is the main formula, cost of goods sold by average inventory. The relationship between the cost of goods sold and average inventory is known as what? This inventory turnover ratio. Or sometime we can tell that cost of sometime we can tell that sales per average inventory. Okay, sales, cost of revenue from operation. Sometime we are telling cost of revenue from operation, divided by average inventory. So this is the formula you have to calculate inventory turnover ratio. What is inventory turnover ratio? Inventory turnover ratio means how many times in a particular year the inventories are being turned in a particular year. How many number of times in a particular year the inventories are being turned, to check whether your organization is efficient or not. That's why we are calculating the inventory turnover ratio. Higher is the inventory turnover ratio, that shows that the company is much more efficient. Lower is the inventory turnover ratio, the company is treated as inefficient. So that's why inventory turnover ratio means it is the stock velocity, means how many times in a particular year the inventories are being turned, the inventory are cleared. So how many number of times in a year the inventory are cleared, that is known as inventory turnover ratio. And inventory turnover ratio is used to check the efficiency of an organization, whether your organization is efficient enough to maintain proper about the inventory or not, where your storage cost will be reduced, where your ordering cost will be reduced, where your total cost will be reduced. So whether how much you are keeping or maintaining good maintenance of your inventory. To check that efficiency, you are calculating the inventory turnover ratio. Okay, so inventory turnover ratio is nothing but cost of goods sold by average inventory. What is cost of goods sold? Cost of goods sold means sales minus gross profit. What is average inventory? How to calculate average inventory? Okay, so cost of goods sold is, how to calculate cost of goods sold? We know how to calculate cost of goods, so that is sales minus gross profit. How to calculate average inventory? Average inventory can be calculated stock at the beginning plus stock at the end of the year divided by 2, or we can say simply opening stock plus closing stock divided by 2. So average inventory can be calculated with the formula opening stock plus closing stock divided by 2. If opening stock, closing stock is not given, simply take if any stock which is given. Okay, that is known as what, everybody? Inventory turnover ratio. And you can calculate cost of goods sold as well as average inventory while calculating this inventory turnover ratio. Inventory turnover ratio हम क्यों calculate करते हैं? ऑर्गेनाइजेशन कितना एफिशिएंट है इन्वेंट्री को मैनेज करने में, इन्वेंट्री को मेंटेनेंस करने में, एंड यू शुड हैव मिनिमम अमाउंट ऑफ मनी शुड बी इन्वेस्टेड इन द इन्वेंट्री, because once you invest in the inventory, your money is being blocked, the entire money is being tied up, and sometimes it happens that there will be a finished goods but it's not converted into sales. So unnecessary, there is a blockage of fund, unnecessary there is a deterioration, there is a obsolescence of that particular item, unnecessary there is a theft will occur, unnecessary there is a pilferage will occur, there is some rent we have to pay for the store house. Okay, so that's why you have to maintain proper about the inventory, and inventory turnover ratio shows that how many number of times in a particular year the inventories are turned in a particular year, and higher is the turnover ratio, higher is the inventory turnover ratio, better is the efficiency. Okay, so that is known as what? Inventory turnover ratio. When you are calculating inventory turnover ratio, after that there is another ratio you have to calculate in support to the inventory turnover ratio, that is inventory conversion period. What is that? ICP. What is that? ICP. ICP means what? Inventory conversion period. Inventory conversion period, how you have to calculate? Number of days in a year, number of days in a year divided by inventory turnover ratio. How you calculated the inventory conversion period? Number of days in a year divided by inventory turnover ratio. Usually the number of days in a year given in a question, it may be 365, it may be 360, it may be 280, something like will be given in a particular question, and you have to put that number of days in a year and inventory turnover ratio, so that you can calculate the inventory conversion period. What do you understand by inventory conversion period? Inventory conversion period means at how many days gap the inventories are being turned. कितना दिन होता है एक इन्वेंट्री से दूसरा इन्वेंट्री को कन्वर्ट करने के लिए, कितना दिन लगता है इन्वेंट्री, दैट इज नोन एज इन्वेंट्री कन्वर्सन पीरियड. ओके, सो शॉर्टर द इन्वेंट्री कन्वर्सन पीरियड, अगर इन्वेंट्री कन्वर्सन पीरियड अगर शॉर्ट हुआ तो, कम से कम हुआ तो, एक ऑर्गेनाइजेशन जो 10 दिन में इन्वेंट्री टर्नओवर करता है, इन्वेंट्री कन्वर्ट करता है, दूसरा ऑर्गेनाइजेशन 20 डेज लेता है. सो कौन सा ऑर्गेनाइजेशन बेहतर है? जिसका 10 ICP है. लेकिन इन्वेंट्री टर्नओवर मामले में अगर एक ऑर्गेनाइजेशन एक ईयर में 20 बार क्या किया, इन्वेंट्री को टर्न किया, दूसरा ऑर्गेनाइजेशन 30 टाइम ही हैज और इट हैज turn over the inventory, then the higher is the turnover should be preferable in terms of inventory turnover ratio. But in case of inventory conversion period, shorter is the period should be preferred. Always the inventory turnover ratio, the units will be in times. Always the inventory turnover ratio, the units will be in times, whereas the inventory conversion period, the unit will be what? In days. So shorter the days it will be preferred, more will be the time it will be preferred in the inventory turnover ratio. So this is all about what? Inventory turnover ratio and inventory conversion period. Okay, let's go quickly and solve a particular problem. So we'll do a small problem so that you will have a clarity about the particular inventory turnover ratio and inventory conversion period. Let's check what is the given. Okay, the question I have to write. Look at the question. The cost of revenue. This is a small question, so you should not worry about. This is a small question. Usually this ratio analysis is having the bigger questions when all the things being asked like current ratio, absolute liquid ratio, asset test ratio, inventory turnover ratio, that will be a big balance, it will be given. Thereafter you have to go for answer. But for this question it is a small question. What is given? The cost of revenue from operation is how much it is given? Rupees 5 lakh it is given. Cost of revenue from operation, that is 5 lakh given. Then the opening stock, given opening stock, how much it is given? Opening stock given, that is 40,000. Okay, 5 lakh given, cost of revenue from operation, then the opening stock given 40,000 and closing stock given, that is 60,000. So what is being asked to calculate? Find out the inventory turnover ratio. So यहाँ पे क्या फाइंड आउट किया है? इन्वेंट्री टर्नओवर रेशियो एंड इन्वेंट्री कन्वर्सन पीरियड. यहाँ पे नंबर ऑफ डेज कितना दिया है? नंबर ऑफ डेज इन ए ईयर यहाँ पे कितना दिया है? 360. Okay, so how to calculate inventory turnover ratio and inventory conversion period? First of all, we have to calculate inventory turnover ratio. Inventory turnover ratio can be calculated by the formula. What is that? Cost of revenue from operation, or simply cost of goods sold. Okay, as it is given revenue from operation, so we are writing cost of revenue from operation divided by average inventory. What is the cost of revenue from operation given? That is 5 lakh given, so you have to put 5 lakh. What is the average inventory? How to calculate? Opening stock, that is stock at the beginning, closing stock at the end, divided by 2. So 5 lakh. ओपनिंग स्टॉक कितना दिया है? ओपनिंग स्टॉक कितना दिया है हम देखेंगे. सो ओपनिंग स्टॉक गिवन 40,000, क्लोजिंग स्टॉक कितना दिया है? 60,000 डिवाइड बाई 2. सो 5 लाख. ये कितना आया? ये 1 लाख बाई 2, दैट इज हाउ मच? 50,000. सो कितना आया? 10 टाइम्स. सो इन्वेंट्री टर्नओवर रेशियो को हम टाइम्स के यूनिट में हम क्या करते हैं? ओके, एक्सप्लेन करते हैं और एक्सप्रेस करते हैं. सो इन्वेंट्री टर्नओवर रेशियो इज 10 टाइम्स. Apart from inventory turnover ratio, what is being asked? The inventory conversion period. Inventory conversion period, the formula will be number of days in a year, divided by number of days in a year divided by inventory turnover ratio. So आपका क्वेश्चन में दिया है number of days in a year, that is 360, divided by आपका कितना आया? That is 10 time, that is inventory turnover ratio. So आपका कितना आया है? That is 30 days. Means every 36 days there is the inventories are being turned. Okay, every 36 days there is a inventory is being turned from that particular organization. So what is this called? That is known as inventory conversion period, that is ICP. Okay. So this is the particular question where we calculated the inventory turnover ratio as well as ICP, that is inventory conversion period. So हमेशा ICP कम होने से अच्छा है और ITR ज़्यादा से ज़्यादा होने से हम उसे क्या बोलेंगे? एफिशिएंट बोलेंगे उस कंपनी को. ओके, now again we have to solve another problem for a better understanding. Okay, so question क्या दिया है? देखो, सो क्रेडिट सेल्स दिया है. क्वेश्चन में क्या दिया है? क्रेडिट सेल्स. Okay, we want that there should be more number of problem we should do so that we'll have a better clarity about this particular financial statement analysis and reporting. Okay, in ratio analysis specifically, credit sales is how much? 1,50,000 and cash sales There is cash sales also there. Rupees how much? 2,50,000. Then return inward. So what do you understand by return inward? Return inward का मतलब क्या है? जो कुछ गुड्स हमने सोल्ड किए, हमारे कस्टमर हमको रिटर्न कर दिया, उसे क्या बोलते हैं? रिटर्न इनवर्ड बोलते हैं, जो कि 25,000 है. देन ओपनिंग स्टॉक दिया है, ओपनिंग स्टॉक 25,000. देन क्लोजिंग स्टॉक दिया है कितना? 35,000. ओके, सो ऑल आर इन रुपीज. So 1,50,000 is the credit sales, cash sales is how much? 2,50,000, return inward is 25,000, opening stock 25,000 दिया है, closing stock 35,000 दिया है. So यहाँ पे क्या पूछा है? Find out bit number A, inventory turnover ratio when GP means gross profit ratio is 20%. आपका इन्वेंट्री टर्नओवर रेशियो कितना होगा जब आपका ग्रॉस प्रॉफिट है कितना? 20%. ओके, दूसरा बिट क्या बोला है क्वेश्चन में? ICP, दैट इज इन्वेंट्री कन्वर्जन पीरियड. वी हैव टू कैलकुलेट बोथ द थिंग्स. ओके, सो हाउ टू सॉल्व दिस प्रॉब्लम? सो फर्स्ट ऑफ ऑल, व्हाट इज इन्वेंट्री टर्नओवर रेशियो? इन्वेंट्री टर्नओवर रेशियो इज कॉस्ट ऑफ सेल्स फ्रॉम ऑपरेशन और cost of goods sold by average inventory. This is the formula we know. Okay, so how to calculate cost of goods sold? Cost of goods sold can be calculated with the formula sales minus gross profit. So what is the sales? So यहाँ पे क्रेडिट सेल्स कितना है? क्रेडिट सेल 1,50,000. देन कैश सेल्स कितना है? 2,50,000. हाउ मच रिटर्न इनवर्ड? सो रिटर्न कितना है इनवर्ड? मतलब सेल्स रिटर्न कितना है जो कि क्वेश्चन में दिया है, कितना दिया है? दैट इज 25,000. सो दिस इज 2,50,000, 1,50,000, दैट मीन्स हाउ मच? 4 लाख माइनस 25,000. सो हाउ मच द नेट सेल्स? दैट इज 3,75,000. दिस इज नोन एज नेट सेल्स. ओके, सो उसके बाद क्या दिया है देखो क्वेश्चन में? व्हेन GP रेशियो इज 20%. GP रेशियो इज 20% मीन्स व्हाट यू अंडरस्टैंडिंग? GP इज 20% ऑन सेल्स. GP इज 20% ऑन सेल. सो 20% ऑफ 3,75,000. सो 3,75,000 का आप 20% लाना है. सो 20% ऑफ 3,75,000 इज हाउ मच? 75,000. ओके, सो दिस इज यू कैलकुलेटेड ग्रॉस प्रॉफिट. सो आपका ग्रॉस प्रॉफिट कितना आ गया? 75,000. ओके, हमारा फॉर्मूला क्या है? सेल्स माइनस GP, दैट इज कॉस्ट ऑफ गुड्स सोल्ड. आपका सेल्स कितना है? 3,75,000. दैट इज द नेट सेल्स वी हैव टू पुट. व्हाट इज द ग्रॉस प्रॉफिट? दैट इज 75,000. And what is average inventory? That is opening stock plus closing stock divided by 2. So 3,70,000 minus 70, that is 3 lakh. Then what is opening stock? Opening stock is 25,000, closing stock is 35,000. So that is 5, 5, 10, 3, 1, 4, 60,000. So 60,000, or simply we have to write all the opening stock 25,000 plus 35,000 divided by 2. So 3 lakh divided by 60,000 by 2. So 3 lakh by 30. So again what is the answer is coming? 10 times. Again what is the answer is coming? 10 times. So inventory turnover ratio we calculated from this particular question, that is how much? 10 times. Then what is the next bit we have to solve? So ICP, that is inventory conversion period. Inventory conversion period has to be calculated, number of days in a year divided by inventory turnover ratio. Number of days, always write the formula number of days in a year divided by inventory turnover ratio. So number of days in a year, that is not given in the question. So simply you can take 365, as we know number of days in a year, that is 365. And how much the inventory turnover ratio we calculated? That is 10. So 36.5 days, so almost it is around 37 days we can say. Okay, so approximately it is 37 days. So for converting your inventory from one inventory to another inventory, you are taking 37 days average. Okay, so this is all about the calculation of what? Inventory turnover ratio and inventory conversion period. Okay, hope you understand this particular problem. Turnover ratio and inventory conversion period will straightly go for another efficiency ratio apart from this inventory turnover ratio. Another ratio, as I suggested, as we have written that another ratio which is there, that is debtors turnover ratio. Okay, debtors turnover ratio, debtors turnover ratio. Okay, debtor turnover ratio, or we can say receivable turnover ratio, receivable turnover ratio. So what do you understand by debtors turnover ratio, receivable turnover ratio? The formula you just check. What is the formula? Okay, the formula will be, simply we can say, credit sales divided by average trade debtors. Okay, so what do you understand by trade debtors? Trade debtors means, what do you understand? Sundry debtors plus bills receivable. Sundry debtors plus bills receivable is known as what? Trade debtors. Okay, so if in the question trade debtors of both the years will be given, so you can take opening debtors, opening trade debtors plus closing trade debtors divided by 2, or simply while calculating the trade debtors we have to add bills receivable with the sundry debtors. Okay, so what do you understand by debtors turnover ratio or receivable turnover ratio? Debtor turnover ratio or receivable turnover ratio shows that how many times in a particular year the inventories are turned into sales. How many times in a particular year the inventory turn into sales with the debtors. Okay, so how many times the debtors are converted in a particular year is known as what? Debtors turnover ratio or receivable turnover ratio. Usually higher is the debtor turnover ratio, better is the efficiency of the organization. Suppose a company or a particular organization want to follow a liberal credit policy. Liberal credit policy का मतलब क्या है? You can extend the credit more and more, okay, on credit basis as per your choice. That means your sales will increase, that means your what, everybody, your debtors will increase at that time, but there are different costs also will arise. What are the costs? It might happen that the customer become bad debts also, there is a doubtful debts also, there will be delay in making the payment also, and you will incur a lot of cost also for meeting that particular debtors also, for calling, sending message to that particular also. There is a lot of administrative cost also incurring while you are dealing with a particular debtors. So usually when you are selling on credit the particular goods to the customer, that is then what arises? The receivable arises. Okay, and or trade debtors will arise. Trade debtors is nothing but is the summation of sundry debtors and bills receivable. So if you are giving liberal credit policy, then what will happen? No doubt your trade debtors will be more, no doubt your bills receivable will be more, but there are different other costs which must be arising through this particular cost, through this particular liberal credit policy. So you should make a balance in between what? This particular credit policy extension, or more and more number of times you are giving, or more days you are giving for this particular debtors, and also whatever the cost you are incurring for that one. Okay, so in debtors turnover ratio shows that what, how many number of times in a particular year the debtors are being turned up, and it shows that higher is the debtor turnover ratio, better is its efficiency. Okay, and it can be calculated with the formula debtors turnover ratio is calculated with credit sales divided by this average trade debtors. Okay, average trade receivables, not debtors, average trade receivables. So trade receivables, how to calculate trade receivables? That is bills receivable plus sundry debtors. With this particular formula you can calculate. So always you remember, trade receivables should always be taken into gross value. No provision for bad doubtful debt should be deducted. Always we have to take the trade receivable as gross value, okay, not the net trade receivable, as we should not deduct this particular doubtful debts or any kind of provision for doubtful debts or bad debts we should not be deducting. Okay, then average collection period. What is this? Average collection period. What do you understand by average collection period? How many days you are taking for collecting the money which is tied with the debtors. Okay, how many days you are taking, how many days an organization is taking for collection of fund from its debtor. So that is known as what? Average collection period. How to calculate the average collection period? The same formula. Okay, that is number of days in a year, divided by, that is TTR, that is debtors turnover ratio. With this formula we can calculate the average collection period. Okay, एवरेज कलेक्शन पीरियड का मतलब क्या है? कितने दिनों में हम डेटर्स में जो मनी है उसको कलेक्ट कर सकेंगे फ्रॉम द डेटर्स. सो वो जितना लो होगा हमारे लिए, हमारे ऑर्गेनाइजेशन के लिए वो बेहतर बोलेंगे हम. ओके, so let's go for a small problem for this debtor turnover ratio. So always remember, higher is the debtor turnover ratio, better is the efficiency, and lower is the average collection period, better is the efficiency of the particular organization. So let's go for a particular problem. Okay, so what is given? Annual sales revenue, or simply it is given so this question given credit sales. Okay, so how much the credit sales given in the question? 25,000. Okay, rupees 25,000. Then sales return. So how much the sales return? That is 1,000. Then debtors, that is 3,000. Then the bills receivable, that is 1,000. So यहाँ पे क्या पूछा है? Find out the receivable टर्नओवर रेशियो. रिसीवेबल टर्नओवर रेशियो को हम बोलते हैं क्या? डेटर्स टर्नओवर भी बोलते हैं. ओके, सो इट इज इनडायरेक्टली आस्क्ड इन दिस पर्टिकुलर क्वेश्चन, व्हाट इज आस्क्ड? द डेटर टर्नओवर रेशियो or receivable turnover ratio. So how to calculate the receivable turnover ratio? Okay, that is credit sales divided by average trade debtors. With this formula we can calculate. So how much the net credit sales? Look at 25,000 is the credit sales, and how much the return? That is 1,000. 25,000 is the credit sales and the return is how much? 1,000. Okay, how to calculate the average trade receivable? Okay, this is receivable, average trade receivables. Okay, so average trade receivable, or if in the question if there is opening trade receivable or closing trade receivable is not given, simply use the formula trade sales by trade receivable. As in this question opening trade receivable and closing trade receivable is not given, so simply we have to proceed credit sales by trade receivable. Trade receivable means what we are understanding? Sundry debtors plus bills receivable. Okay, this 25,000 minus 1,000 is 25,000, 24,000. Sundry debtors how much given? Sundry debtor 3,000, bills receivable 1,000. So 3,000 plus 1,000, so 24,000 by 4,000. That is how much it is coming? It is coming 6 times. So 6 times in a particular year the debtors are being turned off in a particular company. 6 times in a particular year the debtors are being turned off in a particular company. So that is known as what everybody? Debtors turnover ratio. So as in the question the opening trade debtors, opening trade receivable is not given. There is nothing is given as opening and closing. So simply we have to write credit sales by trade receivable rather than writing the average. The average will come whenever there is opening and closing in the question. Next we have to proceed a big problem for a better understanding. Okay, so what is the question? Find out receivable turnover ratio, receivable turnover ratio, turnover ratio. Okay, find out the receivable turnover ratio. बिट बी क्या बोला है? एवरेज कलेक्शन पीरियड, एवरेज कलेक्शन पीरियड. यहाँ पे 2 साल दिया है, एक 31 मार्च 2013 जो कि प्रीवियस ईयर हम बोल सकते हैं, 31 मार्च 2014 जो कि करंट ईयर बोल सकते हैं. ओके, सो यहाँ पे क्या दिया है? एनुअल क्रेडिट सेल्स, एनुअल क्रेडिट सेल्स. Thereafter trade receivable at the beginning. Look at in this question the opening and closing of the trade receivable given. Trade receivable at the beginning, then trade receivable at the end also given. So what is the annual credit sales? That is 5 lakh for 2013 and this is 6 lakh for 2014. Then trade receivable at beginning 80,000, then 1 lakh, then it is given 1 lakh, then 1,20,000. So this is the figure which is given. Okay, so we have to calculate receivable turnover ratio for both the years. Days to be taken. Also in the question is given that the days should be taken as 360. So how to solve this the problem? And we have to calculate for 2013 as well as 2014 also. Okay, so what is the first one? Debtors turnover ratio or receivable turnover ratio? Receivable turnover ratio or debtor turnover ratio. How to calculate? Credit sales by average trade receivables. Okay, credit sales by average trade receivable. With this formula we can calculate. Okay, how much the credit sales of 2013? The 2013 का credit sales कितना हुआ है? Let's say how much the credit sales of the 2013, that is 5 lakh. How much the average trade receivable, that is opening plus closing by 2, 80,000 plus 80,000 plus 1 lakh divided by 2. Okay, similarly for 2014 also how to calculate this way? That is given 6 lakh, it is given. Okay, then opening plus closing by 2. Okay, opening कितना है? That is 1 lakh है, plus closing कितना है? 1,20,000 है, divided by 2. Okay, so 5 lakh. So this is 80,000 plus 1 lakh by 2. Okay, 80,000 plus 1 lakh by 2, that is how much? 90,000 is coming. Then 6 lakh. This is 1 lakh plus 1,20,000, that is 2,20,000 by 2. That means how much it is coming? That is 1,10,000. Okay. See 2,20,000, you can say 2,20,000 by 2, that is 1,10,000. So 5 lakh by 90,000, 6 lakh by 1,10,000. So how much? This is 5.56 times we are getting. That is the debtor turnover ratio or receivable turnover ratio, and this is we are getting 5.45 times. Okay, thereafter in the question it is asked ACP, that is average collection period. How to calculate average collection period? Number of days in a year, number of days in a year, number of days in a year divided by the receivable turnover ratio or debtors turnover ratio. Okay, the same, there is nothing with the ratio, receivable turnover ratio and debtor turnover, they all are same. Okay, number of days it is given in the question 360 and we got the receivable turnover ratio 5.56. So answer will be 64.7, that is 65 days. always we have to mention the average collection period as days. Similarly for 2014 also, number of days is 360 divided by the data turnover ratio or receivable turnover ratio, that is coming as 5.45. that is how much it is coming, 66.05, that is almost 66 days. Okay, so both the years the data turnover ratio or the receivable turnover ratio is almost same. Look at this is 5.56 times and the 5.45 times, and here 65 days of the average collection period, and that particular question this is 66 days. So this is the particular question we discussed today about the data turnover ratio or receivable turnover ratio, and these two ratios, that is inventory turnover ratio and data turnover ratio, shows the efficiency, how much you are efficient enough to manage your receivable, to manage your debtors, and in the inventory turnover ratio you are calculating to check the short-term solvency in terms of how much you are efficient enough to maintain proper your inventory. This is all about today's class about the activity ratio, where two activity ratio we calculated. One is inventory turnover ratio and the other is receivable turnover ratio. Thank you for listening.